to Curious Commerce Capital Budgeting Series, Parts 26. Till now, we learned simple NPV calculations where cash inflows were equal every year. But real business world is fully different. Managers face questions like different cash flow each year, unequal profits, changing returns, multiple year investments. So today we move one step ahead. Today's topic is Advanced NPV Numericals. Many students fear about the advanced numericals because more calculations, different year cash flows confuse will be created. But don't worry, if you follow step by step method, advanced NPV becomes very easy. Today we will solve a complete advanced case together. By end of this video, you can solve advanced NPV confidently. You can handle different cash inflows. You can avoid common mistakes. And one important thing remember in your mind, NPV is not just an exam topic. Real companies use this before for the opening factories, launching the new product, buying machinery, entering to the new market. So this topic is very practical and powerful. Let us begin our advanced NPV journey. Let's understand the problem carefully. Investment required for a project is 2000 rupees. Cash inflow for the first year is 800, for the second year 900, and for the third year is 1000 rupees. The discount rate is 10%. Observe carefully. Cash inflows are unequal in nature. It is 800, 900, 1000 rupees from first year to third year respectively. This is the major difference between the simple and advanced NPV. In real life also, first year profit generally the low. Later years profit increased gradually. That is why advanced NPV is important. Now, what is our goal? We must calculate the present value of each year and uh, add all present values and subtract the initial investment. And finally, we should identify the what is the NPV of the numericals. Very systematic process. And one important concept is future money is worth less than the present value because of the inflation, risk factors, and opportunity cost. Therefore, future cash inflow must be discounted. This discounting process in heart of the NPV. Today we will do everything year-wise carefully. Let's recall the formula. NPV equals sigma cash for the cash flow for the time duration divided by 1 plus r whole to the power of t minus investment. Now let us understand the symbols. CT means cash inflow of every year. R means discounting rate. T means number of years. Very important point is each year has separate discounting. Students often make mistake by adding all cash inflows first. That is wrong. The correct method is discounting year 1 separately, 2 years separately, and third year also separately. Then add. This is why NPV is accurate. Now let us begin calculation one by one. Value of the year first. Cash inflow is 800. The discounting rate is 10%. So the formula is present value equals 800 divided by 1.1. It means that 1 plus 0.1, that's why 1.1 whole to the power of year 1. The answer is approximately 727. So the important observation is The future 800 rupees is not equal to 800 rupees after 1 year. That 800 rupees is equal to 727 rupees only. Why it is reduced? Because of the time value of money. Suppose someone says, I will give you 800 rupees after 1 year. Would you value it same as today is 800? No, because of the inflation, uncertainties, investment opportunities. Hence, the discounting is necessary. Now, the year first present value is complete. Now, we move towards the second year. Cash flow is 900 rupees. It is for the second year. So, notice carefully now the power becomes 2. It means that it is for the second year. That's why the power will be 2. Many students make mistake here. The formula is 900 divided by 1.1 whole to the power of 2. Then divided the 900. The answer approximately 744 rupees. Observe something interesting. Even though cash inflow increased from 800 to 900, the present value not increasing heavily because longer waiting period reduces the value. This is very important in financial logic. Money received later is less valuable. Managers always consider this before the investment. Now, the year second is also complete. We move towards the third year. 1,000 rupees, and the power now it becomes 3 because the third year. After the calculation of 1,000 divided by 1.1 whole to the power of 3, the present value approximately 751. So the interesting observation, students, future cash flow increased to 1,000 rupees, but the present value only is 751. This is clearly shows the power of discounting. Longer the time, lower the present value. This is why companies prefer earlier cash flows, quicker recovery, faster return. Time itself has financial value. Now, all three present values are ready. The next step is add all present values. Add all present values. The first year is 727, second year is 744, third year is 751. The total is 2222. The simple addition step. But remember, these are all discounted values, not the original cash inflows. If students directly add 800 plus 900 plus 1000, they get 2700 as the answer. That is wrong for NPV because future value must first convert into the present value. This is the core principle of capital budgeting. Now the total PV is ready. The final step is remain. Calculation. The total present value is 2222 and minus the initial investment that is 2000. The final answer is 222. This is the positive NPV. Positive means the project creates value. Company earns more than the required return. That means the investment is financially beneficial. Very important examination point. Positive NPV indicates wealth creation. Managers love projects with positive NPV. If NPV is greater than 0, accept the project. If NPV is less than 0, reject the project. NPV is equal to 0, it is the neutral decision. In our example, the NPV is 222, it is positive NPV, therefore the project should be accepted because the company earns more than the cost of capital. This is why NPV is considered one of the best investment decision technique. It considers the time value, profitability, risk, and actual value creation. Very scientific method. The tip one, always discount each year separately. Second important tip is be careful with the powers. First year the power is 1, for the second year it is power will be 2, and third one is the power will be 3. The third important tip is to avoid rounding to too early. So don't make it as in the rounding of that. So maintain what you get when you are using the calculator. The exact answer should be considered. The tip fourth is use calculator carefully. Small mistakes create wrong NPV. One important advice is practice numericals repeatedly. NPV becomes easy only through practice. These mistakes. The mistake one is wrong exponent value. Second one is adding without discounting. The third mistake is calculation errors. So especially during the decimal calculations, the calculation errors will be arise. Write step by step clearly, use calculators carefully, practice regularly. Accuracy is very important in finance. Managers compare multiple projects. Higher positive NPV usually means the better projects because it creates the higher shareholders' wealth. Real companies use the net present value for factory expansion, machinery purchase, product launch, long term investments. Therefore, the financial manager trusts NPV because it is practical and scientific. That's why this topic is very important for the commerce and management students. Advanced NPV calculation, especially related to the unequal cash inflows, year-wise discountings, and final decision rule. Remember, advanced NPV is easy when steps are followed carefully. Practice improves speed and confidence. Slowly, numericals becomes very simple. The NPV decision rule and interpretation in deeper detail. We will understand how managers compare projects, how to interpret the positive and negative NPVs, and the practical business applications. So continue learning with Curious Commerce. If you enjoyed this session, like, share, and subscribe. Thank you all. See you in the next video.